Welcome to the Portfolio Report by 5 Star Solutions, prepared by Carina, Walton and Zing Smith, prepared for the client of Gary Beveridge. Gary Beveridge is a 30-year-old male builder with an income of about $68,000. He is unmarried with no children. Gary received his $100,000 inheritance from his father recently. He, however, also has a $150,000 home loan. Gary has decided to invest $90,000 of his inheritance and keep the remaining $10,000 in a savings account for his living expenses. Gary's investment goal is to make a 13% yearly return with this investment over a 5-year period. His objective for the end of the project is to buy a new car that will cost around $20,000 and to pay off his home loan with the additional income received from the investment. Gary should not require to withdraw from this during the 5 years, and he is unlikely to lose his job in the following 5 years. Taxes will need to be considered when investing in assets, and Gary has specified that he would not like to invest in airlines, telecommunication sectors, and European firms. Gary is not very risk adverse and is willing to take some sorts of risk. Our investment strategy uses a number of different techniques. Value investing, buying assets that are undervalued and out of favour. Growth investing, putting money into strong return stocks. Diversity investing, spreading money among different sectors. And fundamental and technical analysis, using techniques like fundamental analysis and technical analysis to make stock selection and trading decisions. The Morningstar style box shows the allocation of securities across different company types. As you can see, our portfolio is well diversified across most areas, with a particular focus on small growth companies. This graph shows diversification by sector. As you can see, our portfolio is well diversified across 6 different sectors, with a particular focus on utilities, financial, and the healthcare system. Here you can see the modified correlation matrix from the beginning of 2011 to the end of 2012. This portfolio is well weighted as it contains stocks with low correlations in green and stocks with high correlations in pink. This portfolio's correlations are mainly from low to moderate level, which is to be expected as we selected stocks from a variety of different industry sectors to spread the risk and diversify the portfolio. This is in line with Gary's investment plan and strategies. Here you can see the stock selection for our portfolio. The securities include ANZ with a weighting of 18.19%, Blackmores with a weighting of 24.56%, AMP with a weighting of 1.88%, Oil Search with a weighting of 2.19%, Gage Roads Brewing with a 2.23% weighting, Spark Infrastructure with 19.18% weighting, Ethane Pipeline with a 15.37% weighting, Mortgage Choice with 8.97%, and Skilled Group with 7.44% weighting. By comparing the market benchmarks such as ASX 200, ASX 300 and S&P 500 indices, the 9 selected securities in this portfolio have been performing better than those market benchmarks in the last 2 years and 5 years. The expected return of this portfolio is 17%, which is significantly higher. Hence, we believe this portfolio proposal can meet our clients' investment expectation of 13%. The capital market line graph depicts the portfolio frontier in comparison to the capital market line. The global minimum variance portfolio lies at 16.02%. All points above this are in the efficient frontier and all points below are in the inefficient frontier. Our portfolio lies on the frontier line at 17%, At this point, the portfolio is still widely diversified with 9 securities in total, but is also completely efficient. You can also see on this graph the point where the market or tangency portfolio lies. The security market line graph depicts the return to beta relationship. By graphing the security market line using a market index, we can compare individual stocks and portfolios to determine their performance. As you can see, our portfolio lies well above the security market line. In conclusion, it's evident that our portfolio is a good choice for investors. The portfolio has been carefully evaluated using the modern CAPM, which gives the client a precise prediction of the relationship between the portfolio's expected returns and its risk. It is well diversified. By investing on different sectors and different types of stocks, core, value and growth, we have been able to achieve a reduction in the risk of losses and a reduction in portfolio volatility. Finally, the portfolio should make a return of 17% with a fairly minimal risk.